What's up, guys? Welcome back to the channel. In today's video we'll be looking at Smart Credit, which is an AI powered self-custodial neobank that provides fixed term and fixed rate loans to borrowers and also fixed income funds to lenders, along with a fiat on and off ramp. And this is all done without the risk of a bank run. So Smart Credit is effectively a decentralized global peer-to-peer lending marketplace that facilitates direct connections between lenders and borrowers, eliminating the need for intermediaries and lenders supply their funds while our borrowers access these funds on a worldwide platform. So today we'll be covering what Smart Credit is all about, what some of the platform features are, how to actually get started on the platform. We'll also cover credit lines and fixed income funds, fixed term and fixed interest rates, as well as collateral utilization and position monitoring through their own system. I'll also talk about liquidations that have no bank run risk, like what you have on markets like Aave and Compound, which I have spoken extensively about before. But I'll also talk about what the state of Smart Credit is in regards to the regulations that we have currently, as well as looking at what a lot of people would be interested in, which is the Smart Credit utility token itself, also the rewards program, and also we'll talk about how you can stake Smart Credit. So stay tuned to the end of the video. Make sure you like and you subscribe, and also leave a comment, and don't forget to check out the links in the description. Let's get started with Smart Credit. Okay, guys, so let's look into some of the basics. So Decentral Autonomous Platform Ltd, a BVI company, actually operates the platform smartcredit.io. The leadership team includes co-founders Martin Plume and Tamo Plume, both CFAs or chartered financial analysts who actually have 10 years of experience as vice president at Credit Suisse, Zurich and Switzerland. So the platform features for Smart Credit include fixed term, fixed interest rate collateralized loans for borrowers. Also, you have personal fixed income funds for lenders. You also have efficient collateral utilization, and this is through the positions monitoring system, AI-driven predictive crypto fraud scores, accessible free as well on smarttrust.io. You also have AI-driven continuous transaction monitoring for wallet exchanges, payment processes, and this is all suitable for all crypto service providers and is also accessible via smarttrust.io. They have a fiat on and off ramp, an AI API, and borrow and lend SDK integrations for other wallets and other platforms. Also, they have staking and rewards for users. So that's in a nutshell some of the features that you will find with Smart Credit. So smartcredit.io actually does emphasize offering self-custodial solutions that are actually compliant with regulations, and unlike Aave and Compound and other money market based lending systems, smartcredit.io does not face the risk of a bank run. The vision of Smart Credit is to provide all financial services that traditional banks offer while maintaining a self-custodial approach. So to get started on the platform is very simple, straightforward. Simply launch the app and you'll be able to get started. But I just want to do is cover credit lines and fixed income funds pretty quickly. So on smartcredit.io, lenders establish their personal DeFi fixed income funds by specifying their desired investment types and settling their investment rules. So lenders can opt for short-term lending strategies which are yielding low interest, and also some long-term lending strategies that do yield high interest. They can allocate portions of their portfolio to short-term and or long-term investment as they see it fit. So borrowers, on the other hand, can outline their collateralized loan requirements within credit lines. The specific collateral ratio is influenced by the collateral's asset volatility, the loan term, the borrower's trust score as well. And you have predefined interest rate curves that are put in place with the exact interest rate depending on the underlying asset, loan, term, and also the trust score. SmartCredit.io automatically matches borrowers' loan requests with lenders' fixed income funds in the background. So when you talk about these credit lines, they pretty much resemble traditional finance in terms of how these lines of credit work. Borrowers collateralize their credit lines and can repeatedly borrow against their collateral. For each loan, the borrower specifies the borrowing asset, which is one of the fixed income funds assets available for borrowing, the actual collateral asset for the loan term, the specific collateral ratio for the loan determined by the loan term, the borrowed asset, collateral asset, and also the borrower's trust score. You also have the precise interest rate for the loan, influenced by the loan term, borrowed asset, and the borrower's trust score. And these are all calculated automatically. So during the first loan, the system creates a credit line in the background. For subsequent loans, the credit line is utilized and a borrower can have various collateral types within a single credit line and multiple loans via their credit line as well. So if a loan is liquidated, the remaining focus on the funds are transferred to the borrower's credit line. So borrowers are able to repeatedly borrow against an unallocated collateral in the credit line. They can withdraw unallocated collateral, that is collateral not used for active loans, and they can do this at any time. They can also enhance the collateral ratio of loans or that are active and also add more collateral assets to their credit line. Borrowers must pay gas ETH for the following transactions. That is the first loan, which creates the credit line, depositing collateral on the platform as well, which is another thing. And as far as repaying the loan, if a borrower already has sort of collateral in the credit line, they can create new loan requests without paying gas. In this case, gas is only paid when repaying the loan, resulting in significant gas savings for the borrower. Smart Credit also does not hypothecate collateral, so the collateral remains locked in credit lines and it's actually considered out of circulation. There are 4 types of credit types: ERC to ERC20 borrowing. So that's borrowing ERC20 assets against ERC20 collateral. ERC20 ETH borrowing, so that's borrowing ERC20 assets against ETH collateral. Then you've got ERC20 borrowing ETH against ERC20 collateral. Then you have borrowing ETH against ETH, and this is for those who wish to do that. So a credit line is established with the initial borrowing transaction. It's actually used in subsequent borrowing transactions as well. The asset within the credit line can be reused continuously, similar to a collateralized line of credit in traditional finance. So fixed term and fixed interest rates is another thing that we have to talk about today. So unlike most borrowing and lending platforms in DeFi that offer variable rates, variable loan terms, SmartCredit.io to the real economy is trying to provide borrowers with fixed interest rates and fixed loan terms. Why are fixed rates important for borrowers? You might want to know. Well, predictability is very crucial in any economy. It allows borrowers to know their capital cost, also their liability values in advance. So if you talk about why fixed loan terms are necessary for borrowers as well, this means that borrowers can anticipate their financial obligations beforehand and they can actually use their collateral more efficiently. As far as these fixed income funds, lenders can create their personal fixed income funds and deposit assets into them. The platform then matches the FIF's borrowers' credit lines. Lenders lend through their FIFs and deciding on the maturity ratios for their asset investments. And this enables lenders to combine various loan maturities and actually generate their desired loan portfolios. So this is all well and good, but like I said, they do also have this efficient collateral utilization and positions monitoring system, which features a positions monitoring system, allowing borrowers to pretty much receive Telegram notifications if the liquidation probability increases. This automated function is accessible to all users, position monitoring promotes efficient collateral usage. Of course, liquidations, another thing that we have to really touch on. Smart credit does oversee loans and initiates liquidation if a borrower does fail to pay, if their collateral value does drop far. So borrowers' collateral assets in the smart contracts are actually safeguarded by oracles, ensuring that the liquidation process commences only after a oracle verification. Unlike competitors, who I do love quite a lot, Ave Compound, also Maker, Smart Credit does not profit from liquidation, so any remaining collateral post-liquidation is actually returned to the borrower. Competing platforms do generate revenue by liquidating under-collateralized borrowers, selling their collateral at a discount. The residual collateral value becomes profit for the liquidator bots, often hosted by their respective platforms. Some instances, liquidations revenue account for up to 50% of a platform's total earnings, which sounds like they would be incentivized to have you liquidated. So if collateral is insufficient to cover a borrower's obligation, the loss provision fund compensates the loss or the lender for that difference. So there are no bank runs. So many DeFi platforms do obviously suffer from this due to unmatched maturities. In contrast, SmartCredit.io matches borrowers and lenders' maturities, functioning like a traditional bank without custodial concerns or bank run risks. Okay, so from a regulatory perspective, since I did say I would touch on this briefly, Smart Credit does operate as a purely peer-to-peer platform without pulling clients' assets, and as a result, it does not need to register within. It doesn't need to register as a security. Competitors that have implemented peer-to-peer business models rather must register as securities, which they may never actually achieve due to these complications of having to go through those verifications and getting approval. So SmartCredit.io has implemented transaction monitoring, of course. So loans are also managed on the platform, where you have SmartCredit.io pairing borrowers' loans requests with lenders' fixed income funds through three-component system, where you've got borrowers establishing collateralized loan requests using credit lines. You've got lenders creating fixed income funds, deposit assets. You've got Smart Credit serving as a matching engine, connecting borrowers and loan requests with lenders with fixed income funds. So interest payments accumulate in the FIFs, like I've said, continually matching new loans with a new request. So Smart Credit is an interesting token as well. You know, the token utility is something we should talk about. You can use it for collateral, for borrowing. You can use it to stake. You can improve it to improve your, you can use it to improve your credit scoring. To purchase Smart Credit tokens is quite easy using your Web3 wallet, such as MetaMask. You can purchase this through decentralized exchanges. So you can just connect your wallet to MetaMask, for example. You can add the token Smart CD, so you can make sure when your tokens do get credited, you can view them easily. Make sure you add the contract address. You usually can pull this off on CoinGecko, CoinMarketCap. Just check out Smart Credit, go to the contract address on there, import that to your MetaMask and sign the signature. And once your wallet is connected to Smart Credit, smart contracts, you can then proceed to swap for another asset. For example, here we swap some Ethereum for Smart Credit. As you can see, we paid a little bit of gas and then we submitted that transaction, and you can see it cleared, the swap was completed. As far as the rewards program, they do have staking rewards for holders, 15% annualized inflation, 225,000 tokens annually for staking rewards allocated, 4,327 tokens weekly allocated to staking rewards. Bonus rewards, again, another fantastic thing for borrowers and lenders alike. 10% annualized inflation, 150K tokens annually allocated for bonus rewards, 2,885 tokens weekly for bonus rewards. As far as affiliates and marketing rewards, 6% annualized inflation, 90,000 tokens annually. Make sure you check out the link in the description. Use my link to get started with Smart Credit if you do wish to do that, so I can get some of that affiliate kickback as well for giving you this alpha, guys. So you can stake your rewards provided obviously to Smart Credit holders. Will lend Smart Credit via staking FIFs and earning rewards in return. Smart Credit, like I said, distributes tokens weekly to stakers. Go to the app v2.smartcredit.io. You check out the dashboard, launch the app, begin staking. You'll give the app permission to interact with your wallet, sign that contract, create the staking contract. You'll be required to pay a gas fee for that initial setup and contract interaction. Choose the amount of smart credit tokens that you wish to stake. For example, here we stake just over 100 tokens. Pay the gas fees that are due to that process. Once that's processed, your tokens will be staked, and you can see that the staking rules are pretty easy and simple as well. Staking is executed via smartcredit.io fixed income funds, with each staker required to create a unique staking FIF. To receive these rewards, stakers must deposit for a minimum of 90 days. You can increase your staking position at any time by depositing additional smart credits. Staking for less than 90 days actually results in forfeiture of your rewards. Stakers can initiate a request withdrawal transaction to cancel staking, triggering a 5-day cooldown period. You can withdraw any amount within the 5-day cooldown commencement period, and remaining tokens are still eligible for staking rewards if deposited for at least 90 days. Users can claim rewards or utilize gasless restaking to restake their staking rewards, which is fantastic. Gasless restaking of rewards is kind of nice when you're doing recurring stakes there. So gasless restaking is also a distinct feature, allowing you to claim rewards, deposit them without paying any gas fees. Again, this is something that I feel like you guys should check out. Smartcredit.io is the main website. Check out the link in the description for you to get started if you want to. Don't forget to check out the links in the description to some of my favorite decentralized exchanges, GMX, GNS. You also can use Apex protocols, SYN futures, etc. all in the description. If you go to our main site on our ecosystems tab, whole host of recommendations of some of the best platforms. We do price comparisons in terms of the rates that you're offered, in terms of transaction fees for trading, etc. On our main site, just go to exchanges. If you want to know more about wallets, compare which kind of wallets you like, custodial, non-custodial, web wallets, mobile wallets, make sure you go to our main site. If you want to know more about DeFi applications, NFT, marketplaces, all of that good stuff, make sure you head on over to our resources page. And again, guys, make sure you give us a thumbs up, subscribe to the channel, and also make sure you join our Telegram and our Discord server. If you want to know more about real world asset tokenization on the blockchain, check out my book, Tokenized Trillions, and also my other book, Blockchain Applied. It will give you a real insight into different use cases for distributed ledgers across numerous industries. Like, share, subscribe, turn on the notifications. I will be seeing you guys in the next video. Peace and love, y'all.